Hey guys. All right, looks like people are coming in. Um, hey, what's up? Can you guys hear me? Just let me know in the chat if you guys can hear me. Alrighty. We'll give it a couple minutes for people to come in, and we will get started. Here. Awesome. 11 people. All right, cool. It's good to see everyone here. I'm doing it. I hope you guys all had a good weekend. So, yeah, I haven't done streams for a good 6 to 7 months. Just I've been really busy with I work a full-time job and everything. Um, but yeah, I'm back in the grind, and if we get a good turnaround for these sessions, I will continue to do them. And I don't know how great the quality is and everything on these, but if we get a good turnaround, I will, upgrade the equipment and get a better mic, get some better web. Maybe I'll get a webcam so you can see what I look like. But Bitcoin had a nice run. Interesting. So typically I don't really look um, at these guys, but so basically how this is going to go, and we'll get started in a couple minutes. We'll let people come in. We have 15 now, but I'm going to go through a watch list. So this week I have 10 that I've already selected, and we're going to go through each chart, and I will kind of go through what I'm seeing and what we're going to be playing for this week. Yes, please do an upgrade. I hear you, Esma. So, um, you know, I will invest in that upgrade so we get some good quality content for you guys. And yeah, so and then after I go through my watch list, I will, bring it to the chat, and you guys can kind of request some tickers or something you want me to look at a little bit closer, and we can take a look at that together. But let's see, I know someone said Bitcoin. Yeah, Bitcoin is, starting to pop off a bit. So what we're going to want to look at for this week on miners, we're going to look at Mara, Riot, um, those kind of guys like MSTR. But yeah, awesome. All right, so we'll get started and go to here. So honestly, let's go first things first. Let's just start off with some indices. So today we're going to be talking about Apple, Facebook, IWM, Microsoft, MU, PayPal, SPX, Tesla, TSM, and I also have VXX here. So this is VIX. So we do have a few indices here, these ETFs. So we're going to go with these first, as these I've included as overall pictures that will influence the rest of the positions that we are going to be looking at. So first off, let's go look at SPX. So um, I'll go ahead and explain kind of what I'm seeing and how I pretty much predicted that this move is going to happen. So I've had this same chart. I haven't changed a thing since down here, this mid-March, 14th, 15th, where we're trying to base out here. So, how was I able to figure out and anticipate, we're going to get this massive breakout, right? How? Um, that's pretty simple. So there's something that I like to call fractals. So it's using previous historical price action, um, and comparing that to current price action. So you probably hear a lot of people say history repeats itself, such and such, and that's the kind of concept we're going to be using today. It's one of these concepts that it's just one of the many tools in my toolbox. I'll never, trade solely off of this, but it's good to have this ability to be able to paint that picture and add that with the rest of your confluence. So you know, I would ignore the rest up here for now. We want to be looking day to day. We don't want to, get caught up in euphoria and say, oh, June we're going to see, 5,000 plus. That's not the point of this. The point here is, okay, what directions are we looking at, in the next 1 to 5 days, right? So I have this green circle here, and this here is the area I want you to focus on in comparison to this. So I will go ahead and clone this. We'll get a little messy here. That's why I didn't keep that there to begin with. But these are the two areas I'm going to be comparing. So we have this, green circle, red lines. These are going to be this red line is going to be the most important trend line that we have in the market right now. Above this, we are bullish. And we have broken out of that. As long as we do maintain this breakout, I do anticipate we'd hit new all-time highs. I know it's bold. A lot of people, very quickly flipped from bearish to bullish to bearish, etc. What my views are the most current views that I see with, what price action is telling me. So from this point on, you can see here we pretty closely match the price action of this previous move on this last big drawdown. And if you remember down here, this was September, October 2021, and a lot of people were calling for the top here. They're all saying, oh, we've topped out. The big correction is in. We're coming, right? So what happened here? Same thing, just on a larger scale. You can see the proportions are just a little bit larger on this right side, but the magnitude of the move is fairly similar. And the outcome I'm expecting is also going to be similar. So off this breakout, we can see we really did not have too big of pullbacks at all, to be honest. And this is the daily chart, by the way. You can see here it is a little bit, we got this little pullback here, and we paused right here at this 45, 43 level. So I will explain what this means here and where I see us going. So let me clean up the chart a little bit. But from this, what I can see so far as we are following the previous path pretty to the T, to be honest, we are not going to see many pullbacks or many significant pullbacks. And the trend essentially right now that we're looking at is going to be by the dips. So futures open up fairly soon, and we're going to see on Monday how we open up. I'm not really too sure yet where we stand here. As I'm going to need some more data on Monday in pre-market and the overnight session tonight. But what I am seeing here is if we do pause here, we may pretty slightly, but I do expect some continuation. So you can see here, I'll zoom in a little bit now. We did pause right at this supply zone, major supply zone. So here we can see this area acted as previous resistance. We broke through, acted as support 3 times until we broke, pierced back down, and that led to a big sell-off. You can see we tried to get back above this area, but failed to. So now it is looking like a area of resistance. So this is going to be my main area that I'm going to be watching early in this week. If we can get over this, I would say 4,600, 4,605 on SPX, we are looking very good. We have 50 to 60 points to the upside off that break. So, that's a pretty significant move. I would say, it's a good 1.3% move that we can pretty confidently catch. So this is where, we are approaching resistance here potentially, still in a larger breakout though. So we want to keep this in mind where we are in the general trend of the market and use this to our advantage when we search for other plays that we want to prepare for. So next up, I will be looking at VIX. So I have seen quite a few people post some pictures and charts about VIX where we're going to get a bounce. In my opinion, that's just not going to happen right now. We might, play out a little bit more, a little longer here in this triangle, but overall, this right here is a bear pennant. We have this huge middle finger that is very prevalent. You can't really miss this. And this is, been the general trend on VIX. So, this here is the volatility index, and we get these major spikes, and usually when VIX spikes up, this is where that fear gets instilled in people, and this is where the markets tend to drop, or we get into this really choppy phase. We can see we've recovered essentially, and this here is that inversely proportional move to what we've seen in the markets, where we've had 7 to 10 green days straight, and that is inversely proportional to VIX kind of dying off. So we can see here we are coiling, and this is bearish in my opinion right here. So we are just coiling here, and maybe a 4-hour will look a little better. So we are in this pennant. So of course pennants can break to the upside still. So that is a possibility, and we are sitting red at support. So it is possible we do bounce up down inside this pennant for a little bit longer. However, I do expect this to break down eventually. And our next target from here, we can mark some more stuff on the charts here. So, this would be next immediate support with, the shorter term support right here at around 23.89. We get 22.65, and ultimately I do expect this lower area of low 21s on VIX to get hit. This is going to result in that inverse move with the indices moving higher. So this is where all of these different charts are kind of aligning, right? So we want to look at multiple different areas and have things confluence with each other. So this is kind of my view on VIX that I'm going to be using as well as SPX, and that's going to influence my trades. So lastly, I'm going to do IWM. So IWM is a position that I am currently in a swing. So I am holding calls, and we can see here. So looking at the overview, we have this same large downtrend, and we can see that from here, we can see that we are in proportion to SPX, this is really not broken out as much as the other indices yet, right? So we can look at triple Qs after this as well. But you can see, we really are still fairly close to this breakout line, where SPX and Qs, they're up here in this region in proportion. So in my opinion right now, IWM is lagging, and it is a ticking time bomb. We got a very, very strong candle on Friday. Here we can see, very strong candle. We closed green, where we had quite a strong downside move, and we sniped that entry on Friday. So from here, we do have this falling wedge type pattern. If you don't know what that is, that is just sorry, not a bearish, a bullish chart pattern. You can look that up. So we have a falling wedge here, and we did close above that falling wedge. I'm gonna get rid of this for now. And we did close above that. So zooming in here, you can see this choppy action. So we got that down move on Friday, and we got a nice recovery into the end of the day. So what I would like to see overnight and for Monday, I would like to see IWM gap up. And what I'm expecting is IWM to kind of lead, take the lead here. So I expect IWM to go on this large move, and I am still expecting SPX and triple Qs to be bullish. However, I think they're going to be a little slower, where those two have led the market recently, and the first one we're going to look at is Apple, because that is really what has been carrying the market. So it's a big indicator. So I think those are going to be the laggards, and IWM is going to take the lead. So this is why I am, swinging IWM. Of course, we do have to have targets and stop losses in place. We want to plan our trades and we want to go into each trade with a plan. Otherwise, if things go south, you don't have a plan and, you're going to get destroyed. So, here I have marked, I know it's a little messy, just because I have a lot of alerts set, but this low from Friday is going to be my stop loss. So, if we do hit that, we hit it, and we just move on. But this is that breakout from that falling wedge and, the low of Friday. So that's a pretty safe stop loss to use. So targets up here, you can see these are marked as these white lines, white horizontal lines. So we have target 1 at 209, and you can see exactly where I get these from. This is that previous wick high from February 10th. So it's actually been a while since we've tested these levels up here. And, we test that again on March 22nd. So, with this falling wedge breakout here, if we do see strength and continuation early in the week, we can, move up and retest that 208, 209 region. The next region up is going to be 212. And then my final target is going to be that 215, 216 region. That's where I will be taking off majority, if not all, of my IWM position and repositioning for the next trade. Does anyone have questions on that? I am looking at the chat now so I can catch up. Yeah, Esma, I do totally understand. I wish the screen was a little bit clearer too. I'll look into, getting some better equipment. But for now, this is on short notice what I have. But any questions on IWM or any of the indices that I've talked about so far? Otherwise, just like, give me like a thumbs up or a emo in the chat. Let's see. Alrighty. So let's go here. Sweet. Alrighty. Now we're going to go over to Apple. There. Perfect. So let's go to the weekly first, because that is going to be a little more clean. All right, so Apple. So like I said earlier, Apple really has been leading the markets and has been, taking the lead in this whole move up in the market recently. You can see, this is quite absurd. We've had almost a 17% move increase on Apple. So that's, pretty crazy, to be honest, in such a short term, 2 weeks. So with such an impulsive move, we need to, take a step back. We need to zoom out and we need to see, what exactly is going on here. So why do I think the markets are so bullish right now? I've been calling it for multiple weeks now, not just since we're actually moving now. I've expected this. It's just been a matter of being patient and waiting for the right setup. So here, Apple, what we want to do here is identify trends, essentially. So here, what I have identified in Apple, and I've for those that have been following me for a good year or so, because I've been on here for a while, you guys remember these Apple plays. We played this one. We pretty much got calls right at 126, rode it up to, I didn't catch the whole move, but I rode it up to 145. And then here, the same play, I got in at 152 and got out right here at 161-ish, 162. So, how did I call these? And, I did miss this one, but, it is what it is. We want to look for these plays. So these larger, bold lines, red being resistance, green being support, these are our, larger term trends. These are where price has been stuck in between and trading in between for a while. So these are really, those big, bold lines that we want to pay attention to. And, when we do cross or, price gets close to one of these lines, that's where we're, really paying attention, and, a significant move is going to happen. So inside of this larger trend is going to be a micro trend, and that is going to be these red slanted dot lines. So these here, I've noticed on Apple, we get these diagonal lines that fit fairly well within the larger trend, and every time we do break above them with nice volume and good strength, like we've seen in the past, like on these past two times, we typically like to test this upper trend line. That's kind of been the trend on Apple. So first time we broke out, nice volume, nice strength, test the upper trend line. Same thing here. Nice volume and strength, test the upper trend line. Same week. This was crazy. And then same one here now. So we can see we did break above this massive trend. However, we did, come back down and, come back to reality for a bit and retest some levels. So a lot of people here, got burned. It's a large fake out. And this is where that huge corrective move happened for a bit. And now we're looking here. We find some support, and I have the same line drawn as before. So we have 1, 2, 3 points. Third point here is last week where we did break through. So technically, you could have taken an entry on Apple like right here at around 169, and you could still be holding into this week. This is just a play that I miss personally. I'm not going to catch every play, but this is just my explanation on how these plays are found and where these basically come from. So you can do it for yourself as well. But yeah, so we have this bull flag following wedgish pattern here with this micro green support and this red resistance that we did break above. So what we're looking for here now, we don't have this upper trend line anymore to use as a target, just because we've broken above now. So this is very bullish if we can stay above this this diagonal trend and this major red trend line as well. So this 168-ish area, 169 area is going to be very, very, very important for Apple to hold and maintain on this breakout. If we can hold this, for me personally, I don't see too much upside left on Apple. I think it's going to cool off, and this is why I spoke about the indices previously first, because this aligns with that, with that statement, because I expect them to cool down a little bit. I expect them to slow down, and I expect small caps in IWM to kind of take the lead. So, Apple, as bullish as it is, I don't see too much upside opportunity for an entry this week. What I do expect is a nice pullback. So here you can see I use Fibonacci's quite often. These are my bread and butter, and in confluence with kind of just like trend lines and price action itself, it enables me to paint a picture of where I see the stock moving. So from here, this Fibonacci, reverse Fibonacci, is drawn from this high from January 4th down to the recent low we had in March. So this here, that's where this comes from. We did smash through almost all the fibs, and the last significant fib that I have here is this 176 level. If we do break through 176 and have, I would probably look for a 15-minute to 1 hour close on 176. If you're really patient, wait for a daily close. If we do get that daily close above 176, we are going to hit all-time highs before a pullback. So plan for Apple this week, 176, watch how it reacts. Don't touch it yet until we get that reaction. If we get a rejection and, we get some weak price action, and, VIX is starting to bounce up, SPY and Qs are starting to, pull back a bit, that's where you can potentially take a short entry and, have your stops right at 176, a close above 176. That's a very good risk reward trade. What do I mean by that? I will put in the short position. if we took an entry, let's say we entered right around here. Our stops are going to be right at 176. If you want to be even a little bit more lenient, you can go to this high, which is 176.75-ish. We got quite a bit of downside room. Our next target would be down in this region to retest this trend line. That right there is almost a 7-to-1 risk reward trade. These are the type of trades that I look for personally, and is a trade that I would be willing to take. So that's a trade to look out for. On the opposite end, if we do get that close above 176 on the reverse, so we'll say we enter a little bit above 176. We'll put our stop loss a little bit below 176. Our target is all-time high. That right there is, a pretty ridiculous trade. This is where we get a 14 to 15 to 1 risk reward. So, I would take profits a little sooner than you would want to on this, just because it's such a high risk reward. Or, maybe give yourself a little bit of room on the stop loss. But you guys kind of get the point. You can adjust the plays, but that's kind of what I'm looking for on Apple. If we do get the pullback on this 176, I expect something like this to play out. So this kind of yellowish dotted line, this is going to be what I'm looking at. So this fib is drawn out from the March low to this anticipated high. So, I'm saying anticipated because I'm not sure if it's going to be a high yet. We could just, power through and, I could be wrong, but in this case, I don't mind being wrong. If we do power through, we go long. But, say we do go to the down route, we get, my minimum targets to the downside with time, obviously, is going to be 163. So, we can play a short position here, and I wouldn't go long until we can see some support in the 155 to 163 region. This is where I see, a much better risk reward buy to go long on call swings. Any questions on Apple? Hope that all made sense there. I'll take a little break here to read the chat. Let's see. Any chance for Lucid and NIO to fill the gap down? Remind me after we go through these charts, and I'll take a look at them. Are you going to be doing this live session every Sunday evening? Yes, I'm going to be trying to. If we get enough interest on these, I'll try to make this more out of a consistent basis. And like I said, I'm going to upgrade my equipment so you guys get a clearer screen. Because I also watch YouTube, so I can understand the frustration there. But I hope it is okay for the time being. All right. Looks like we are good on Apple. So let's move on to the next one. Facebook. So pretty quick one on Facebook here. I haven't updated my chart too much just because of how steep this downward move is on Facebook. So we do have a very, very, very steep trend. And for something like this, I don't really these trend lines aren't as significant in my opinion. If anything, this trend line up here, this red one would be the most significant, but this is more of a long term just because this is it's quite a stretch. It's a good 30%, 34% move on Facebook. But Facebook is one of those ones that did get really destroyed. The software stock got destroyed from earnings and on this big downward pullback on the indices. But this did provide quite a great equity add opportunity. So me personally on my long-term equity accounts, I did add. This is one of these names that I did add on, and this is similar into the names of like Square, PayPal, Alibaba, all these guys. The chart looks fairly similar for them. But Facebook piqued my interest. We did bounce off of my this is almost the last straw level for me because if we did break below this 190 and close under, saw continuation, we really open up exposure down to this, March 2020 low, which is, very dangerous. This is that COVID low. So we did get saved right in the nick of time where we needed to. And we saw that strength in the market. This isn't as strong as Apple, but it still went up a good 21% on the stock. So what I'm looking for here, I'm more interested in the weekly chart here. And we can see we did reject. So you can see these EMA lines here. So the white one here, this is the 8 EMA, the purple is the 21, and the blue is the 34. So these are just exponential moving averages that I typically like to use on charts. And these would obviously be the weeklies. So on this weekly time frame, we did reject and wick right off of the 8 weekly EMA. So this here is that level that I'm going to be watching into this week. And personally, I think this is decently safe to swing. However, I would play this more as a day trade and trim your position and keep a small amount of your position to swing potentially. But I would play this as a day trade because a quick pop over this 226 level is we get a good move to 230, I would say. And we can look at this here. On the daily time frame, we are above all these EMAs. And we closed right at that 34 EMA, and we can see this 8 EMA crossing above, and this is very bullish. So this cross here is on the daily, and this is something that I'm looking at because we haven't crossed. This hasn't happened since let's see, way down here. This hasn't crossed and has been above since beginning of 2022. So this is pretty significant. So what we're looking for here is, like I said, 226, pop above that with volume, of course, and I like to use flow as well to add that to the tool belt to make sure everything is in confluence. But over 226, I would look for a day trade up to 230, and probably I would be taking 230 calls here on a pop above 226. Give yourself 2 weeks of time and trim your position on that same day if we see a significant move, and just set your stop loss and call it a day. So that's what I would be looking for on Facebook. Any questions there? Large versus micro trend lines. What amount days do you like to select for each? I'm not exactly sure what you mean by that, but for me, on trend lines, I typically for a trend line to be valid in a sense, and for me to hold heavy weight onto it, I want at least 3 touches. So what I mean by that is let's look at this, for example, on Facebook previously. We can see these wicks here come in contact with my trend line multiple times. So what I mean by contact, I want 3 points of contact onto my trend line before I can call it, a definitive trend line. So, let's compare this one to the one I have drawn now. So, here we have 1, 2, 3. If I draw this down, you can even call it 4, 5, 6, 7 touches. So this is a very valid trend line. Down here for the support, we had 1, 2, 3, 4, 5. These are both valid trend lines. And this would be defining that trading range that I would trade within. Here, this is a lot more difficult to trade in because of, one, the magnitude of the move, obviously, and how steep it was. But look at this up here now. We get, I would call this 1. I wouldn't call this 2, to be honest. Be more safe than sorry here. I'd call this 1 touch, 2 touch. So, when we do, get a potential move up, who knows if I'm right here, but, this would be that 3rd touch. And since we only have 2 touches previously, I wouldn't be, going all in on calls right here on a anticipated breakout. I would be way more cautious here just because that is that only 3rd touch, and be anticipating actually a rejection. And say this does happen and we get, another move here, and this would be that fourth touch. This is where I would be okay. We have 1, 2, 3 touches. Previously, we're, experience a potential fourth touch. This is where I'm looking to go long. I hope that kind of clears it up. Awesome. So let's keep it going. Microsoft. So this is one that I did alert last week, and I did get out too early. What's new? So, it's okay though. I'm never going to be, too upset about that. There's a couple times I get a little upset, but this year, not too upset about it. So we played the move from, I believe it was around here at like, I forget. No, it was like right here. We played the move off 289, 290, and took profits around here, I think. 298, somewhere around there. I can't remember. But basically, we have this nice wedge pattern here, falling wedge, that we did break out of. And we are, it hasn't been a super crazy breakout. In comparison to the rest, we can see here we've moved about 10% and change. So, compared to Facebook, compared to Apple, this really isn't something that has moved too significantly yet. So I would, consider this almost a laggard against other tech. So we can see here we have a potential to move higher here. My key trigger level here is going to be this 306 level. So, this is a really, really good example of needing to zoom out, because from this chart, you probably can't see exactly clearly why 306 is my level. You'd say, oh, Senpai, like, why not just take the high from Friday? Why take such a, small margin above? And this is where we zoom out. Look from here. This is, we're looking at late 2021 action back in August, September. We had this really, really major resistance that, prevented Microsoft from moving higher from, August 2021 all the way till October, until we did finally pierce through and, make that huge run from 306 all the way up to 349. So this is a very important trigger level here. That goes all the way back from 2021. So that's why, that level is significant for me, and that's my trigger level for this week. So, without zooming out there, you really wouldn't know where 306 comes from, but I hope that clears it up and shows the importance of, not only looking at the smaller picture, but also the larger picture, as that, helps define levels for you. But yeah, for this, same thing. Above 306, I would play this the same way as I said for Facebook. I would, probably take 310 calls, and look for 2 weeks of time on expiration. Probably trim that position same day if we get that a good move, and save a small portion of that swing, or small portion of that position for a swing, and set your stop loss. So as we move higher, you raise your stop loss. The worst thing to happen is you enter a trade, you're up bigly, and you don't set stop loss. God forbid we gap down and now you're red on the trade, right? So going from green to red on a pretty big trade, that sucks. So we don't want that to happen. So make sure you guys are managing your risk and position sizing accordingly. But yeah, this is one that's on watch for me. Any questions on Microsoft? All right, looking good. So let's continue further down. MU. So I did take a look at all the chip stocks, semiconductors, and MU, and you can see TSM is here as well. MU and TSM are my favorite ones. I did take a look at the other guys like NVIDIA, AMD, ITC. I didn't like those ones as much. I think these setups are a little better, and you can see kind of a trend on what I'm choosing as for setups. MU hasn't moved as much in relativity to the rest of the sector. So, SMH, this is tracking all semiconductors, the semiconductor ETF. You can see here, these guys are moving higher. AMD, moved higher. NVIDIA, way higher. So, MU, we're still coiling down here. And we do have a very similar setup to the IWM trade, actually. We have this falling wedge pattern. And you can see that I have this labeled as an Elliott wave theory setup. I do believe we have potentially bottomed down here at this 68.36 level region. We did coil down here, and this could be the end of that pullback. So we did close right above this smaller falling wedge resistance. And what I'm looking for here is a break above this 78.5 level. And I probably should mark it on the chart like this. So this here is going to be that level. Let's go like that. So you can see that's marked now, 78.5. That's going to be that recent high and showing that we do get that continuation higher. We can see also from zooming out that this region is acting as an inflection point. We got that resistance here, support here, and then potentially resistance that we're going to break here. So 78.5 is going to be that region that I'm looking for early in the week to break above. And if we do get that, let's go and check out our targets. So we're going to draw the fibs from high-low. On this next large break higher, we can see something like this happen. 1, 2, 3, 4, 5. Just like this. So, if we do play this first move above 78.5, I would strictly play this as a day trade and play this up to, this mid $80 region. I think we're going to stall here for a bit before another retest lower. But in the larger term picture, I would be pretty bullish on this. So MU does still have some work to do, but there's opportunity for day trades this week. So again, 78.5 is the level for MU. Let's move on. PayPal here. So PayPal is very similar to the Facebook setup in the sense of we had this huge move down, arguably even crazier than Facebook. So this here is the all-time PayPal chart. So down here, we can see that PayPal has moved significantly lower. We are down, let's see, to the lows, like 70% from the highs. So this is a very, very large drawdown. And we were testing these March 2020 lows essentially. So we are holding here. However, on this weekly chart, we can see again using the 8 EMA, we did get that we did hit this resistance essentially. So a break above this level of I would call it 120. This is where I see a nice pop where buyers are back in control and we're going to move higher. So 120 would be my call entry. Probably I would go for 125 or 130 calls by 2 to 3 weeks of time. This is a pretty decent swing opportunity where you can set your stop loss right below that trigger level. But there's also opportunities here for a day trade. So both work in my opinion here. Next up, got Roku. So we can go over Roku in a second. I just have 2 more charts here to do, and then I can take requests. Tesla. So Tesla here, very, very awesome trade. I did pretty much I believe it was actually last Sunday, called out that we're extremely bullish on Tesla. Do not short this stock. This was last week, so don't short it. We can see from last week, we moved from 908 all the way up to this 1040 region, so a good 14-15% move on the stock. And last week's trigger level was 908. This week I would be a little bit more cautious. However, I'm going to bring this higher now. So it's that same thing. So same thing here as in Apple, where I think that we are at a point where we're hitting quite significant resistance. So I can draw this out a little bit clearer as a rectangle, but this here, um, from this 110 to 150-ish region, this is a very, very, very tough region to get through, in my opinion. So for me to take a long on this position, we need to see continuation first. If you want to be a little bit more aggressive, this here is the 2-hour chart, and we can see from the last trading session, essentially, here we have a pennant forming. So, this here is technically bullish. This is a bullish pennant. So early in the week, so this is probably like a Monday trade, in my opinion. If we break above, I would call it maybe 1020, 1020 to 1025. I'm going to need more pre-market data for this actual trade tomorrow, but those regions there, if we can break above, I would be pretty comfortable going long around that region and playing that up to 1040. So that would be a very good day trade. So a good 15-20 point move. Above that, that's a second trade that you could take. Above 1040, you get a 10-point move, and then if we can close above this 1050-ish region, it sets up a very, very large breakout. It's telling me we're going to move higher before a pullback. So we open up rooms to 1100 plus on this on this impulsive move. Otherwise, just like Apple, I do expect if we do start to reject this region, indices start getting weak. This is one of those good prime contenders for a short. I think and this is where I'm going to draw out the fibs again. So we'll draw this out like this, and then we'll put the fibs in. Get rid of this. There we go. So we can see here, lines up pretty well with the level that it had drawn. So if we can reject this region and probably fall under the wedge that I drew, basically, from here. So if we break down of this wedge that was formed last week, I would be pretty comfortable going short here. First target being 972. And then we have, we do have room down to 930s and then ultimately down to 900. So that would be my final target and ideal place to go long again. But yeah, just be careful with Tesla. It moves very, very quickly and premiums move very quickly as well. So make sure you have a proper account size to play Tesla. Lastly, TSM. This here isn't the cleanest of setups in my opinion, and this hasn't moved significantly, just like the other semis. So this is a little bit lagging, kind of just like how I said with MU. However, we are basing here above a breakout, so this is a little bit of a messy breakout. But we are, coiling here, and we're technically above this larger downtrend. So what I'm looking for here is a break above this, I would call it, 108.5. 108.5 would be my breakout level. So we can see we've been coiling here and it's acting as that that resistance again. So above 108.5, we get a nice little pop to 110. So this would be a good day trade. I don't know how much higher we can go from there before seeing resistance again. So this isn't, the best trading setup in my opinion, but it's a good one to keep on our radar that, has potential. Because, if we do break above this 110 region, that's where we open up to this gap fill of 113 to 115 and ultimately back up to, you've been seeing kind of a trend with a lot of these stocks where they've been reversing. A lot of them are in this 50% to 61.8% retracement already from the high and low. So a lot of stocks already up here. So MU and TSM, these guys are laggers, and they haven't moved up to these regions yet. So we could see that shift in momentum there. But yeah, Any questions on what I've talked about so far? Otherwise, I'll open up the floor to other tickers. All right, I will quickly go over Roku and I'll check the chat after to see. But yeah, put in the chat what you guys want to see, and I'll do a few of them. So Roku, same thing. Got pretty destroyed. Just like PayPal. So this is the all-time chart here. Very, very intricate Elliott wave theory analysis here, but basically looking for a low here. We haven't moved too much higher from this low. So, risk reward wise, this is a pretty high risk reward trade, in my opinion. So, what I'd be looking for here is, we need a break and close above this 8 EMA on the weekly. This here, this is I would call it 134.5. Above there, we can probably see a pop to 142. Just because here, price action is getting a bit tight. We could see quite a strong move here. So, above this 132.5 opens up room to 142 and then 150. Let's see what else we got. We can take a look at AMD, sure. So AMD is one of these stocks. So this kind of looks like Microsoft. For me to take a long on here, I'm going to need some strength. So for me here, this is the reason why I didn't include this is just because it's right at my take profit level. Because I did have AMD calls, and this right here is my target before seeing some sort of consolidation. So in between this 119 to 123 region, this is where I'm expecting a local top to form. So, to update it, we can go like this. So, we do have room to 123 potentially, but I do think ultimately we do come down and we're going to see a nice little corrective move. So let's just call this the top, right? We'll draw the fibs. And we're right into this region. So if Friday was the top here, we're looking at 111 to 116 as that potential bid. So for me, I would really like to see 114, 115 test, and I'll consider along there potentially. But for me, I don't see the it's not a high risk reward trade for the upside for me potentially. Yeah. Let's see, what else? Did you teach yourself all of this? Yes, I did. All of this is self-taught. It's, just a lot of screen time and, analyzing the markets and, being able to identify these trends. Like I said, it's really just screen time and just, self-taught. The more you look at charts, the more you're going to, or the easier you're going to be able to identify these trends and setups essentially. So, it's just like anything. The more you do it, the more you learn, the better you're going to be at it. But yeah, last call. Any other questions or any other tickers you want me to look at? Just drop it in the chat right now and I'll take a look at it. Otherwise, I think we can wrap it up. Oh yeah, I did remember someone said to look at NIO, so I can look at that. From your experience, do you find using Elliott Wave more reliable or support resistance with EMAs, especially in a market like we are having right now? Don't forget NIO and Lucid. Yep. So I'll cover NIO and Lucid right after this. So for me, I actually use both. So for me, it's not Elliott wave theory or support and resistance with EMAs. It's both. So for me, I like to use So this can just be for anybody, actually. Like you have a set of tools you use. You don't use just one tool. You want to use, a collection of tools, and you want each tool to agree with the other, essentially. So, if my Elliott wave theory analysis agrees with, a support resistance, and, EMAs are in confluence as well, that's a very powerful setup for me. So what I look for in setups is multiple, directions of these tools to kind of agree with each other. So if you remember from my alert on Friday with IWM, before I alerted, so in the morning I sent a message that said, it's very rare that we find this, and it is the setup is, the three like golden rules for me, for the setup. So for me, that refers to Elliott wave theory, and then the actual TA itself. So like that's that support resistance, trend line, EMA, and then lastly I look at flow. So flow is something that I use quite frequently as well, and is that last form of confirmation personally for me. So yeah, I wouldn't say one is better than the other or more reliable than the other. I would say that's a little bit more personal preference if you do want to just go with one of them. But I think it's important to establish a system that works personally for you. But yeah, for me, I like to use both. And then quickly, I'll look at NIO. I know you said the gap. Okay, so I know gap you're talking about. So yes, there is a good possibility that this does fill. It doesn't have to fill, but I think it's a good possibility that these lower regions get tested. So you can see here, I do have a Fibonacci retracement drawn, and this is inferring that this was the top here. Let me kind of make this a little neater. But yeah, this is inferring that this was, that local top, and then we have the local bottom here. So if that is true, we're in for a wave two pullback, and this is all via Elliott wave theory. So for a wave two pullback, we get anywhere between the 0.5 to 0.786, and that is, this gap is definitely in that picture. So, if we do get, that breakdown, I would say, this is very viable. So if we are really indeed in this move, then I'd look for something like this. So, we get this first move down. From what I see here so far, it looks more like it's going to be a three wave. So we're gonna look at something like this. It could get a little more complex than this, but and we can go a little further down too. Don't take these values too seriously, but I think we're gonna bottom out somewhere down here, have a nice little rebound, and ultimately go lower. So I wouldn't go long until we hit these regions down here. And then I would assume, I think the other one that you mentioned was Lucid. I can look at it super quick, but I assume it's going to be very similar. So yeah, this isn't a stock that I typically really look at, but you can do the same thing here. Draw a line, set the fibs. You're looking at this, same thing. However, this one does look a little bit more bullish because we do have this this trend line here. So could argue that we're in like a small bull flag. So in terms of like comparing Lucid versus NIO, Lucid looks a little more bullish in this point, but personally, it's just not my stock that I would trade. Let's see what else. Do you have a video for fib levels? Yes. So I did do. So if you do after the stream, like check out my channel here. It's been a little dead. I've been really busy, but I did do a fib video, so you can check that out. I might do an update, and I might start pumping out like more videos. So definitely like DM me or something, or like leave a comment on this video to like tell me what you guys want to see, and I'll try to get to it, or just topics. But I do have a video there. Please teach us how to set up stop loss. What is it basically? So that is something that is going to take a while. So I'm not going to go too deep into it. But basically, you just want to set up your risk rewards, essentially. I know you guys are talking about IWM here, so for me, stop loss here is going to be the low from Friday. So that's going to be this roughly like 204.4 region, 204.5. That's going to be my stop loss. In terms of why I set this and like the positioning, that's a whole different conversation. Maybe I'll do a video on it, or if you like really want to know, just like DM me and we can go through it. But it's a longer conversation to have. Michael, I don't know if you just came in, but I did already go through IWM. So this is on the weekly watch list setup. So after this is done, you can go ahead and just like rewind and look over it. But I did explain that. Yeah, awesome. And then lastly, I'll look at UPST. So, this year, this is a great one because I don't really have much on here. So it's a kind of a fresh ticker to use. So first off, I'm just going to mark off trend lines that I see. We're just going to go ahead and kind of mark this one off. So this is the all-time chart. This here is the all-time fibs from all-time high, all-time low. We are currently trading, or we did wick under this 786. So this is a very risky level for me, opinion, and it's a little bit weak. So for me, not really something that I would trade. It looks like we're kind of ranging. So in terms of a trade, I want to look at like a kind of like a micro trend line now. So we're going to look at this and set it red. So for me, I use red for resistance, green for support. So here is that that major support I drew out earlier, and then this here is that resistance. So personally for me, I would not take a trade on UPST until we break either above the red or below the green. So above red, we'd look for calls. Let me get my line. So above, we're looking at these regions here. So we're looking at 133.8 target, 134, let's call it 134 target. And then we get this next high at 160. And then below, below this trend line, next stop, we're looking at 85, 75. Awesome. Asma, I want a big thank you for this amazing video. Please do more videos. Awesome. Yeah. I appreciate the kind words, and definitely leave a comment down or something if you have something that you want me to cover or look at or like any feedback from this stream would be awesome. I know I'm not perfect. I'm just trying to do the best I can with what I have. So any constructive criticism, just throw it at me, or what you'd like to see. But yeah, really great. Awesome. So yeah, I'm glad you guys are learning a lot from this stream, but check out the channel. I do have videos up. They're a little bit older, but I think they're from a few months back. But check out those videos and definitely DM me. You know where to find me if you have questions, and links in the description. So leave a thumbs up, and thank you guys. I appreciate everyone tuning in this week. Let's have a profitable week, and I will see you guys all on Discord. Have a great rest of your night, everyone.